I'm Eric Barnes with the Daily Memphian, and welcome to this edition of the Extra Podcast. This week, we're visiting with Douglas Scarboro, Senior VP and Regional Executive of the Memphis branch of the Federal Reserve, talking about the economy, the role of the Fed, and much more. Douglas, thanks for joining us.
Oh, no problem. Thanks for joining. Thanks for inviting me. I look forward to doing it.
Absolutely. Let's start, real broadly about maybe, some people probably, I think most people have heard of the Fed at a national level, but are maybe not fully aware of the regional system, let alone, the local branches. So just talk broadly for a second about what the Memphis branch of the St. Louis Fed, what your role is there.
Oh, absolutely. So I'm, as you said, the Senior Vice President is title and then serve in the role of the regional executive for the Memphis branch of the Federal Reserve Bank of St. Louis. And sometimes it becomes a mouthful, but the way that it works is that you have three main parts to the Federal Reserve. You have regional banks, and that's what St. Louis is. So you have St. Louis, you have Kansas City, you have 12 of those. And then you also have the Federal Open Markets Committee, which is what most people, when you talk about the Federal Reserve, it's kind of two main things that people think about. One is interest rates, and the other one is, physical cash. And that's a large role of Federal Open Markets Committee, FOMC, is the one that's responsible for setting the interest rate. And then you also have the Board of Governors, because the Fed is actually a quasi-governmental organization. So you have that Board of Governors in Washington, D.C., and they are mostly government individuals. You have your governors there as well, but then you also have throughout the regional banks like myself, individuals that are part of the regional banks that are kind of private entities. And one thing I do have to do early on, Eric, is give our disclaimer that these views are my own. They're not the views of the Federal Reserve Bank of St. Louis or the Federal Reserve System.
Yeah, sure. I get that. And so right now, when you look at Memphis and the region, obviously the economy has taken a huge blow. Although just in the last few weeks, there have been some little indications of a bit of a, if not, certainly not a full rebound, but some positive indications here. If a declining, fewer unemployment, people filing for unemployment qualifies as improvement. What's your take? Again, your personal take, looking at the local and regional economy.
So local and regional, the thing that's interesting about this is that, usually we're so much looking at the Memphis zone. I'm so much looking at the Memphis zone area, and that is mostly it's northern Mississippi, but also western Tennessee, eastern Arkansas. But this, because of the way the pandemic hit and the shutdown pretty much across the nation. So, March 12th, a number of businesses closing across the nation. It is more applicable. The nation looks a lot more like the rest of the country. Now, where that starts to change is when places start to open up and what places are doing. So with Memphis and the Mid-South, here, obviously we have a lot of logistics. We have, some bioinformatics as well. And because of that, you start to see some of our wage rates, especially as you look across the rest of the Federal Reserve, our district, which is 7 states. So you look at, Little Rock, you look at Louisville, you also look at St. Louis, and we haven't done as wage rates as bad as a number of them because a lot of our workers have continued to work. If you have somebody that's at FedEx and they're loading packages, I know, working here at home, I've been getting a ton of packages. A lot of them are coming through FedEx, and a lot of people are still there working. So you have those entities that are still going. Now, what happens so far as difference in place as opposed to timing is based upon the situation, and a lot of it is the density of the city, but obviously the spread of the coronavirus is how those cities are starting to come back online. So you've had some cities like New York that got hit harder, and they're starting to come back online now. So you're starting to see their economy improve more so than you've seen other places. With Memphis being behind that curve and being less dense than, say, a Boston or New York, you're starting to see our economy start coming back online now, businesses opening. And with those businesses opening, you're starting to see some improvement in the economy.
And it's also interesting. I mean, you talk about other markets. I mean, Memphis never really ended construction. I mean, downtown, the hotels, the various hotels and some apartment complexes and so on that were all under construction never really stopped. There's construction. I live in Midtown in the medical district that didn't stop. That obviously was not the case in, say, in New York, but even, I don't even know, in St. Louis or maybe some of the other cities in this region where the shutdowns were a lot. I'm not saying this wasn't severe. I mean, it was obviously severe here, but they were less severe than other places. And is that bode well for a quicker rebound, or do we know yet?
Some of it's still to be seen. So even you were talking earlier about those unemployment numbers, always want to remind people those numbers, just like anything else, they get revised. And those were the initial numbers that came out. They'll get revised a couple of times. Like you said, those construction projects, I was on a call earlier this week or either late last week, Union Row and One Bill. Those larger ones are still continue on. Same thing I've seen in St. Louis, large construction projects. They have a lot of work going on in their downtown as well. It's still those projects are still going on. And what happened with those is, you see large complex financing that's part of those, and that complex financing, because it has different parts, a lot of those parts of 15 are able to continue. And some of that is due in part to the different facilities that Federal Reserve put up, because the whole reason for doing that was to hurry up and get some liquidity in the market. So that way it's not, projects don't have to stop because you don't have cash in the bank or you don't have securities, that they're able to continue on. So yeah, we have seen those, especially those larger ones. What was interesting on the construction side with housing, with residential, is that you already had kind of a low inventory. Like obviously, we used to live down the street from each other, or live not too far from each other, and here in Midtown, inventory is low. Yeah. And because the inventory is low and there's still not necessarily a lot of construction going on, and not necessarily a potential for an inventory boom, there's not a lot of new housing starts on the market. Right. I don't see a major correction there. So the large ones kept on working, and the smaller ones are just not necessarily as much build.
Yeah. You talked about some of the programs the Fed, I mean, again, people who are familiar with the Fed, even and those who lived through or remember the 08 financial crisis and recession, the Fed played this incredible role of providing liquidity, of lending programs. Obviously, back in 08, there was a kind of illness, for lack of a better word, within the banking system that the Fed was trying to help. In this case, the banks were in much better shape. So this time, the Fed has had a different role. What I'm also curious about, though, and I remember back in 08, there was some criticism that the Fed didn't do enough for small businesses, didn't do enough for, literally sort of, I think it was Main Street, what people would say, that, yeah, the big banks and Wall Street and big corporations got tremendous help. But what about the small businesses? This time around, unfortunately, we're back to another time around, the Fed is trying to do more for small businesses and for local entities. Talk maybe about some of those programs.
Absolutely. So you've seen the Fed, pretty much pull out the full array, or a full array of resources. First started off with that, we talked about interest rates earlier, 1.5 deduction going down to 0 to 0.25 for the federal funds rate. And then that's what interest rates are based upon. Also, you've seen Chair Powell and a number of the governors and officials leading with what they call forward guidance, or giving a sense of what's going to happen. But then, a host of different facilities and programs introduced, everything from outright purchases of Treasury to things done around liquidity and funding measures to, additional backing from the Treasury using facilities that were going to support credit to households and businesses. That's what you're saying, where it was an intentional effort by the Federal Reserve to not only have programs, and really they were tiering programs. Some were for large businesses, some for mid-sized businesses, but also making sure that banks have liquidity, because we don't lend or we don't necessarily directly give out money, but we are the lender of last resort, so we do lend money. So with our lending powers, making sure that banks have that liquidity, so then that way they can still serve households, still serve business. And you see a program that should be getting started here pretty soon, that the Main Street lending facility. So working directly with banks, so that way they can go, and commercial banks being the ones that most people know. Most folks, that when they think of their bank, they're not thinking of a large investment bank or thinking of a super regional banks. They're thinking of their bank around the corner, one that they go get their car loan from, the one they go get their mortgage from, or they keep their money at. And we want to make sure from the standpoint of the Fed with a number of facilities, especially with the Main Street program, that those banks still have liquidity and are able to service their customers.
Yeah, it's an interesting program. I mean, a lot of small business owners got familiar with the Paycheck Protection Program, the PPP loans. But again, back to that, what people think of the Fed as being more of a Wall Street oriented, corporation oriented, I think most people do, much bigger oriented entity. These are loans down to, and I'm looking on the Fed's website, down to $250,000. They're for businesses that were in good shape, prior to the coronavirus. They're 5-year loans. They're not forgivable. They're not grants. That's a big difference that you all have pushed, unlike the PPP loans, which were meant to be in many cases forgivable. Very low interest rate, deferred interest rate. And again, it's done through local banks where the Fed then purchases up to 95% of the loan. So the bank has relatively low risk. It's still early, right? I think you all have just started, and I say you all in the broadest sense, right? The Fed has just started to enroll lenders who will be doing this, but people who are listening, I guess they go to the website to learn more about the Main Street Lending Program?
Absolutely. Absolutely. Go to the website. That one program is the Main Street program is run by the Boston Fed. One of the things we're more than happy to do, Maria, if you would, you can send over some of the information to Eric, a direct link there. But also, as you think about, or as you hear from Congress, I know it should be not today, or not tomorrow, I think it is, Chairman Powell will go to the Senate and having his conversation there, is you consistently hear us talk about the mission of the Fed, and the mission being stable prices and full employment. And when you hear stable prices and full employment, nowhere in there do you hear it's only for Wall Street, or it's in exclusion of Main Street. This is a mission, and even in the structure of the Fed, this is a mission that's set up to serve Main Street, where that's the reason for the regional bank. That's why we have not only our bank in St. Louis, our headquarters there, but we have branches here in Memphis. We have one in Little Rock. We have one in Louisville. With those, we're able to be directly in community. Each one of the branches has a board. So I have 7 members, and part of the way I look at and we're picking members is I'm looking throughout the zone. So you're going to see 2 or 3 from the Memphis area, but you're going to see we have a director. Actually, our chair is from Ivan, Mississippi. We're going to have somebody else from Huntington, Tennessee. We have somebody else that's from Jonesboro, Arkansas. And that is deliberately done because you have to have people from those areas to tell you directly. And we have conversations with them 8 times a year, and they're telling us directly what's happening in those areas. That information is then fed up to our president. So when he goes to the FOMC, he has direct knowledge of what's happening. You know what's happening in St. Louis, but you also know what's happening in Jonesboro, Arkansas. And when they're around the table setting monetary policy, that information's there.
A bunch more questions on a number of those points, but let me take a moment to remind you that this podcast is brought to you by FedEx. Possibilities, what we deliver by delivering. Let me also note that the Extra podcast, which normally is more of an arts and culture focused podcast, but during this pandemic, we've focused on coronavirus for obvious reasons, as well as the economic impact. But it is one of many weekly podcasts we do at the Daily Memphian. We also, Behind the Headlines is also a podcast available on the site, as well as Bill Drees' politics podcast. Jennifer Biggs does a food podcast. And whenever we do get back to sports, we have a number of sports podcasts. All of them are on the site. They're on iTunes, Spotify, Google Play, or wherever you get your podcasts. The Atlanta Fed, you talked about, I think it's the 12 different entities, regional entities. The Atlanta Fed president, Raphael Bostic, wrote an open letter after the kind of horror and then the protests following George Floyd's killing in Minneapolis, and this kind of awakening that the country is in many ways going through to systemic racism and institutionalized racism, not just at the level of police violence or police mistreatment of people, but he wrote a really powerful, just its pointedness and its density about how systemic racism is not only morally wrong, but it's economically bad policy. And I'll quote from it: "The economic contributions of these Americans," and he's mostly talking about African Americans and Hispanics and people who've been left out of the economic system too often, He says, in the form of work product and innovation will be less than they otherwise could have been. Systemic racism is a yoke that drags on the American economy. And again, with the caveat that you, of course, are here, speaking your own points of view, not necessarily the point of view of the Fed as a whole. Your thoughts on that, on where we are and where we need to be in terms of creating a more inclusive economy, both for the moral reasons, but also just for the pure economic benefits of it.
Absolutely. So, like you said, that come from the Atlanta Fed, but it was interesting to me that you saw a number of statements. It seems like they almost came out in succession on Monday, where you heard not only Raphael Bostic from Atlanta, you also heard Robert Kaplan from Dallas, Neil Kashkari is president of the Minneapolis Fed, and also I think it was Mary Daly from San Francisco Fed as well, and all speaking out not only against racism, but also systemic injustices. And when you look at the role of the Fed, as you were saying earlier, most people would know about interest rates, or that's interest rates, and obviously you look at currency and they'll say there's a Federal Reserve note, but one of the things they may not know as much about the Fed is our community development work and also our economic education work. And that's something that we've taken on for a number of years, and we have work that we do in communities, everything from investment connection program that we do that helps people connect entities that are CRA eligible with banks that are willing to do lending. Now, the reason for doing that, go ahead.
And I apologize.
I'm sorry, CRA.
Define CRA, because not
Community Reinvestment Act. Yeah, the Community Reinvestment Act that is about 40 years old. Sorry about that. And that is an act that was put in place to make sure that banks are invested in their community. And part of the reason for that is that 40 years ago, you did not want it to get to the situation that you have today, where you have riots that are happening, you have protests that are happening here in Memphis, in Atlanta, where Raphael Bostic is, and where Rayshard Brooks was shot and killed by a police officer last Friday. That's after the killing of George Floyd. And what you see is an unrest that is, this case we look at, tied to sometimes, and a lot of times, economic injustice. Even as you look at the COVID crisis, you look at who's going to work, and you look at who's affected by the crisis. Initially, and we've seen that African Americans have, gotten COVID at a much higher rate, but then also they are the ones that are frontline workers. About 34% of the frontline workers that are going, like I was talking earlier about, delivering FedEx packages, delivering Amazon packages, the ones that are working in grocery stores. Those are African Americans, the much higher rates than what they are represented in the population, but then they're still having to go to work. So those economic injustices is something, as we talk about full employment and we talk about stable prices, especially on the full employment side of the dual mandate of the Fed, it becomes extremely important, because the last thing you want to have is a society that says it's just. And when individuals have done everything that they're supposed to do, when they go to school, they get educated, and they're applying for the jobs in life, and then they're not getting the jobs. They're not able to have the same economic footing as somebody else simply due to the color of the skin, and that's just wrong.
Yeah, I've drawn a blank because we've done so many shows on COVID, but one of the guests was talking about how African Americans tend to be much more nurses' aides, working in the hospitals. Again, that you mentioned, of course, essential jobs like the distribution and grocery stores. And I saw, and I meant to look it up, and I didn't. It was a study that I heard on, or read it on an article, that African Americans are much quicker to lose their jobs, not just suffering from coronavirus infection at much higher rates, in some cases twice as high as their representation of the population. Hispanics, the same thing. But also lose their jobs faster, and their small businesses tend to go under more quickly, which is just compounds the problem that we're talking about here, that African Americans who are denied access to the economic system, who are denied access to home loans, who are denied access to so much for so many decades, that just as they're starting to make headway, that these small businesses are the first to go under. So it's difficult, obviously. And so talk more about community development maybe, or the economic education, some of the things that you all are trying to do that you were doing pre-corona, and that I assume in some ways you will redouble your efforts going forward.
Oh, absolutely. Even, picking up on some of what you were just saying is one of the statements I've had is African Americans, we get it worse than we get it first.
Yeah.
So if you're looking at disease or you're looking at economic inequality, that we're suffering much worse, and also you're getting it before you see it in a lot of other communities. And from an economic, from economic education standpoint, and also from a community development standpoint, that's something that we want to work at and make sure that it's changed. One of the biggest things I saw, and we've added to it and want to continue and continue our efforts on, was a bank-owned program. I started with the Fed a little over 5 years ago, and then the Shelby County Trustees Office, they were leading this effort, and we participated, and we were helping because we wanted to make sure that minority population had a banking relationship. Like, whether it was talking about a checking account, you're talking about businesses being banked. Well, that is extremely important, and that has become to be seen as even more important during these critical times, because you've seen that when the PPP program came out, that banks were working with people that they had existing relationships with, and ones that also had open loans. Where if you have a number of African Americans, a number of Latinos that do not have banking relationships, when they're given those loans, they're not even able to get those loans. Right. So that bank-owned program was a way that we wanted to make sure that we alleviated that. Another that we have done, I mentioned earlier, was the Investment Connection Program that works with CRA eligible entities, the Community Reinvestment Act eligible entities, to help get them to be able to have, connecting them with funders that are going to be able to fund efforts they have. We also have, even things that are just directly and as straightforward as financial literacy programs for kids during the summer. I know I have kids, and they're here at the house and they're not going to summer camp, but they went to a virtual summer camp online that the Federal Reserve Bank of St. Louis put together. There's no cost for it. You can go online. It's for elementary schoolers and also middle schoolers, and they can go online. They learn about everything from, understanding the financial system to understanding stocks and bonds at the middle school level. So, we have a host of things like that. I know even one that was interesting, you were asking me about earlier, some of the, what have I seen in particular to our market, and I was saying that see it here, but also see it nationally, is they did a special survey that came out, actually was released on May 1st, and it was looking at, talked to 4,000 different entities, and in talking to those 4,000 different entities, was able to get a sense of what's happening. Actually, the report is called Perspectives from Main Street: Impact of COVID-19 on Communities and Entities Serving Them, and getting a sense from them of what's most important, when is it likely that you'll see that you're able to come back, what are things that are going to be critical now, what are things that are going to be critical later. And that's one of the things, one of our main roles in that space of community development, economic education, is not only providing information, but also being a convener.
Yeah. Well, obviously there is much more to this, but we are out of time for today. But people can learn more if they go to the Fed site. I've learned a little bit more about it in preparation for this interview, from some other things going on. It's a wealth of information. Douglas, thanks so much for doing this.
No problem, Eric. Thanks a ton for giving me a call.
Yeah, and that is all the time we have today, but a reminder that this podcast is brought to you by FedEx. Possibilities, what we deliver by delivering. Be sure to subscribe to the Daily Memphian on the site for unlimited articles. Follow me on Twitter at EricBarnes2, or check us out at Daily Memphian. And again, subscribe to this weekly podcast and our other podcasts on the site or on iTunes, Spotify, or wherever you get your podcasts. Thanks for joining us.